Thank you to all of our listeners. If at any point while we're talking, you have any questions about our mortgage minimizer or about anything that we're talking about, drop them below that pinned tweet and we'll be sure to get to them. We're really, really excited to have everyone here. And now that Wayne's up on stage, I think that we can kick this off. How about that, guys? So, Wayne, just want to make sure you can hear me all right and that your microphone's working.
You betcha. Thanks, Jackson.
Beautiful. Well, thank you to everyone joining us. Once I kick off this introduction, I'm going to put out a tweet myself. We encourage everyone, invite all your friends. This is going to be a really fun space here today. We're diving deep into one of my favorite products that we have here at Infineo, our mortgage minimizer. We've been putting a lot of work into our webinars around the mortgage minimizer. So you might have been seeing this on our feeds and might have been wondering, well, what the heck is the mortgage minimizer? And if that's you, you're in the right space. Our mortgage minimizer is a tool using infinite banking. It provides you a strategy, not just a process, but a strategy on how to use infinite banking to pay down your mortgages. I'm definitely not the person you want to hear talking about this. And that's why we have our Infineo experts on stage today with George Roth, Wayne Durksen, Liz Lamond, and the actual developer of the product, James Pollard, not the technical developer, but our director of product development here at Infineo. And so we've got quite an exciting panel for you, and we're going to be talking to James about where the mortgage minimizer came from, the thought behind it, what it actually is, how it works, and how you can actually use it in your life. And so with that, I'd love to kind of open the floor to everyone to give a quick intro for those that may not know you guys. Again, this is recorded. This will live live on Twitter. And so for any of those listening to the recording too, it'd be great if we could do some quick intros.
Sounds good. Well, I'll go first.
Thanks, James.
Yep. So, yes, I've been in the insurance space, I guess, going back, I'm not aging myself, but I guess I will, to 1997 when I was 22 years old. So I've been in the space a long time, but like a lot of people in this space, didn't really know anything about whole life and certainly never heard of infinite banking or the infinite banking concept. Actually, up until 2018, all those years prior to that, it was so completely foreign to us, as it still is to this day to most insurance advisors in North America. And so I discovered it in 2018 and August 8th, actually. I remember the day. And it kind of changed my outlook on everything I was doing. I had a couple other businesses at the time, and I moved away from those businesses and shut them down. And this whole life, dividend paying whole life, and the infinite banking concept became the main direction of my life at that point, that everything else flows through. So, I've been in this space then since 2018, full time. Became infinite banking practitioner, I believe, in 2019 to the Nelson Nash Institute, and been actively working with clients ever since.
Well, that is a perfect introduction, James, and thank you for that. We're really excited to talk to you and get into kind of the story behind the mortgage minimizer as well. And so with that, let's introduce our other panelists here. George, would you mind introducing yourself? And if you're not available right now, potentially Wayne or Liz, would you guys like to introduce yourself next?
Sure, I can go. You can hear me okay?
Yeah, we can hear you.
Okay, perfect. So yeah, I'm going to say I'm not nearly as old as James, but I've been practicing infinite banking since 2010 when I discovered it, and I've been licensed for 16 years now. So as soon as I discovered the concept, discovered the power of participating dividend paying whole life insurance, I implemented it in my life, became a practitioner. We were one of the first in Canada to join the Nelson Nash Institute and become authorized practitioners. First half dozen in Canada, way back in 2012. And been teaching it ever since. So, that's my story. I live it, I teach it, I breathe it, and want to share it with as many people as possible.
Beautiful. Thank you so much for that, George. And next, our other speakers, Wayne or Liz. Would one of you guys like to go next?
Sure, thanks, Jackson. So very similar kind of story, so I'll keep it super brief. And I've done a longer introduction on other episodes if people want to go and listen to recordings. But very simply, I also was sort of frustrated with, the way that things were working in terms of I just thought there had to be a better way to manage my assets and make sure that I had protection. And so I actually learnt about this concept quite by chance. Delighted that did occur. And when I saw the power of it, I was convinced that I needed to start teaching this to other people. So have been doing that ever since, and then continue to use it very actively in my own life, as well as work with clients in teaching them the power of whole life insurance and cash management specifically for business owners, investors, and families.
Perfect. That's incredible, Liz. And Wayne?
Yeah, so similar to the others, I've been doing this for quite some time. I was licensed first licensed in 1987. Went through a lot of different economic ups and downs of the markets, but I'm a hockey buff, and one of the things I say about my love for the sport is I cannot stand to be outcoached. And when I see a team that's being outcoached, it makes me crazy. And that's really what I think is going on in the finance world. People don't understand what's going on, and the traditional system is actually coaching, and you're competing against a very, very flawed, broken system. Once I discovered that, and I stumbled into meeting Nelson Nash, and then he started schooling me on whole life, which I had an opinion and had to unlearn a whole bunch of stuff. I think this is just the greatest thing that I have ever discovered in the whole finance world. And so I'm a raving fan. I think everybody deserves to understand that there doesn't need to be risk and stress and pain. There has to be disciplined, focused, intentional strategy that will lead us to a wealth-building future. And so, thrilled to be part of this group.
Well, thank you guys all for those brief introductions. And one thing just before jumping in here is that it seems it was common amongst all of you guys that infinite banking really changed your lives for the better, so much so that we're on here and preaching, and you guys feel responsible now to teach this knowledge that you've learned to others. And I just think it's so cool that you guys not only have implemented this in your own lives, but have actually taken it upon yourselves to help others learn and, like you said, Wayne, potentially unlearn. So with that, I think it's about time for us to move into our main topic of the day, which is our mortgage minimizer product. For those of you that don't know, James Pollard is our director of product development here at Infineo and was very integral in the development of this software. And so to kick this off, James, could you tell us a little bit about the origin of the mortgage minimizer and kind of how it came to life?
Sure. So, like I said, I discovered this in August of 2018. And so I started up a new insurance brokerage here in Canada by October of that year. And met various people, brought on a partner. And by the spring of 2019, we had a dozen agents working for us, exclusively focused on this process. And the thing we kept coming back from client meetings was people, they were super excited, happy to get started. But again, they didn't really have a solid plan on how to move forward once they had it. I mean, when you start something like this, it can be very exciting to see the future possibilities and look at the numbers. But then it comes to the day-to-day, how do I actually do this? The Nelson's books have become Your Own Banker. And I often point out that the second two words are the most important. It's your own. So we're not your banker. We teach you, we coach you, we hold your hand, we set it up for you. But at the end of the day, it takes some personal responsibility. And that's exactly the opposite what most people were used to doing by going to a financial planner and looking at some fancy charts and graphs and getting distracted by some rates and then just turn over the money and their hands off. It's completely passive. This requires some personal responsibility to take control of what you're doing so that, our agents would come back to us and say, okay, well, the client's super excited, but they're a little nervous about what to do after the fact. And so I said, okay, well, let me sit and look at this. So I look at people's finances. And it occurred to me that how do you keep the momentum going is they need to start using the product right away. And that means they need to fund it annually so that there's enough cash value available immediately to start with a policy loan and start implementing the strategy straight away. And I got looking at a lot of our clients. We were in Canada, of course, at the time when we started this. And a lot of the clients had home equity lines of credit, but they didn't necessarily have any liquidity or very little savings, or a little bit of money they did have was locked up in their government-sponsored retirement plans. I'll say plans with asterisks around them. So it was kind of locked up and they didn't have liquidity. And so if you set a client up with all this excitement and the emotion is high and they get started, but if they have to fund it monthly, they have to wait a whole year before it's really worth taking that first loan and getting started. And it's hard for people to stay excited for a whole year waiting to get started on something when they're transferring far more money every month into a product that we all know and they know in their head that it's a balance sheet asset. They're simply moving money between accounts that they own and control, but emotionally in their heart is still they're spending all this money and they're not getting any results because they're waiting. And that was causing a lot of problems with momentum.
So, James, just real quickly there, because I just want to make sure I understand this correctly so our listeners do too. Are you saying that you get more momentum funding the policy annually because you're doing it in a big chunk and getting all those funds into the policy, as opposed to doing it in small bits monthly, is kind of what you're saying, right?
Yes, and simply by the fact that you can immediately start using the product. There's no delay, okay? So then looking at people's finances, I'm looking through all the financial gathering, all the data we had, and people's mortgage debts and their other debts, and it was kind of I wouldn't call it a light bulb moment. I don't really believe in those, but it just occurred to me one day, wait a minute. So I sat down with my Excel spreadsheet open, which I'm no techie. I had to learn Excel from scratch at the time. But I just started putting in the data and moving the numbers around and checking and rechecking. And I realized I came up with a system that allowed them to move that money into the policy first, immediately borrow from the policy, make a big payment on their mortgage. If they had a line of credit, the money landed in a line of credit and it was available again to wipe out other debts, which in then that case, the payments on those other debts could flow back towards the policy loan they took. And I figured out how to cycle this around in a manner that people would come to us with 25-year mortgages. And by moving the money around like that, their mortgage payments would be gone in 5 or 6 years. They would have clear title on their home 18, 19 years earlier than the bank would have suggested. And all their other debts were paid out at the same time using the same dollars. And it's all, I had to check and double check and triple check because I couldn't believe that nobody had actually come up with this before. But if you don't understand the product and then the process you can run on top of the product, those two things together are fantastic. But if you don't wrap them in a plan with specific instructions for the client, they don't actually ever learn to become their own banker, other than a very few, very motivated, very studious clients, which most people are not. So what this plan did is we're able to write down step by step by step how much to transfer, when to transfer. And they did all this without increasing their expenses, because the only money flowing back towards paying off a policy loan was coming out of their existing expenses by a reduction in your expenses. If their expenses went down by $500 a month, that $500 simply changed direction and went back to the policy loan. And what this allowed to do is to give us a step-by-step set of instructions that we could give to the client with the plan and the products that over the next 5, 6, 7 years. Here, step-by-step what you do and when you do it. And that did a couple of things. It kept the momentum and the excitement going for the client. They understood how to use the product, and simply by the act of taking policy loans and paying them back and paying down their debts, they literally learned how to become their own banker over time. They didn't have to know it at the beginning, but the coaching had to be more than just, here's a policy, here's a process, go watch a YouTube video, figure it out, call me if you need something. That doesn't work. That sets them up for failure.
So the key difference between what what you came up with, one is the process and the guidance around it, and also just the proprietary nature of the software itself. But I'd really like to maybe take a step back for our listeners here that may not be as familiar with the product of whole life insurance or the process of infinite banking or cash management with whole life insurance. And so maybe for those people that don't necessarily know what we're talking about, they hear whole life insurance and they're still thinking of a policy that they pay, and if they die before they're 75, get paid out. What is whole life insurance, and what's the difference between whole life and term? I know it's a very basic concept here, but just for our listeners, I think it'd be good to talk about the product and then move into the process. Would be really helpful here.
Yeah, sure. And I don't want to dominate this conversation, so I'm going to pass it over to George and to start with, and we're all going to weigh in on this piece. But I think having everybody's opinion on this particular part is going to be important.
Sure. So I guess we want to talk about the product. There's also the process. So the product itself is participating dividend-paying whole life insurance, which is an asset. So very few people ever think of insurance as being an asset. You know, everyone hears insurance and they think it's a cost, and I have to die before I can get any benefits. But the way we use this product, this specific product, is that you actually have living benefits. You get to use the cash value that is also accumulating inside your policy with this product, and you get to use it while you're alive. So that's very important. So it's an asset that grows equity, and then we can leverage against that equity, just like we often do with real estate. It's the same kind of concept, similar scenario, but different and better. So that's kind of the product in a nutshell. I'll pass it over to Wayne and Liz and let them add some thoughts there.
Wayne, Liz, if you have anything to add about the product before we move into the process, that would be great.
Yeah, I think that's been said. I think what we have to understand is that the vehicle that we use is, as George pointed out, is a properly structured policy. But why do we use it? It's because there's something happening inside there that allows us to use the benefits or the features of the policy in the interim while we're waiting for it to pay out. And so, as George mentioned, the living benefits, the insurance company has an absolute rock-solid proven plan of what they're trying to do. They're accumulating cash value in anticipation of your eventual passing away. But in the meantime, we have access to utilizing that cash value, and we're the absolute perfect client for them to work with. And so the living benefits, as George mentioned, become very profound. Understanding the concept, even the concept of the mortgage minimizer that James has been brilliant in introducing to our team, is really profound. And it is a concept. It's understanding what's happening and how we can generate use of it. It's just a beautiful feature that actually flies in the face of much of the traditional financial education that's taught out there. Very simple process.
I think the power of this as well is that that I often speak to people about with regard to it, and with reference to the product specifically, is you're basically building two assets instead of one. So there are strategies out there that teach people how to pay down their mortgage faster, for sure. But one, does it offer the level of protection for beyond the payment of the mortgage? So that's really important attribute of permanent whole life insurance, that they have protection and coverage for the whole of their life. But also the nature of it, that you're actually building something that you can that has value, that you can leverage during your lifetime, and then obviously, you know, your family can benefit from in terms of a tax-free death benefit. So very, very powerful. With the same dollars that are available for clients, they can actually create two assets at the same time. So that's one of the really powerful pieces that people really, as they learn to sort of grasp how this can be used, realize, you know, what the potential here is to build for themselves and their families.
I completely agree with Liz, and something you said that really resonated with me was having coverage for your whole life. I don't think people understand most of the time. I mean, I think it's more than half of Americans have life insurance, but the majority of this life insurance is term insurance. And term insurance only pays out if you die in that term, which happens less than 2% of the time. And that is why it's so inexpensive. Whole life insurance, you have coverage for your whole life. You're paying for this asset that you know you're going to get this windfall in the event that you pass away. And so it just makes so much more sense to me. And from a product perspective, paying for a dividend paying cash value whole life insurance policy. And so with that, I think we can move into the process a little bit, because just speaking with you guys offline and individually, you guys really stress the importance of the process. Obviously, you need to make sure that you have a properly structured policy, but nothing's going to happen if you don't utilize it properly. And so maybe, James, you could speak to that and the process and what you've learned about implementing the process of infinite banking.
Yeah, and I always like to speak to people in, analogies maybe, or things that they can wrap their head around and visualize. But the process is completely separate from the product. And let me describe what I mean by that. Say you're a farmer, one of Wayne's clients, one of Wayne's friends here, and you go down to the Ford dealership and you order a new F-350 and you outfit it with bigger suspension and tires, a fifth wheel hitch, and a bull bar on the front, and lower gearing on the back for towing a heavier trailer. That's the policy, the way we design them for this process. But once you get that product home, that farmer takes that truck home. One guy might hook it to the cattle trailer every week, hook it to another trailer to go buy feed. He uses that truck day in and day out, where another farmer just going to take it home. He loves the capability of it, but he just drives it to church on Sunday and leaves it parked in the garage the rest of the time. So the power of the product is always there. The process is how you choose to use it once you get it home. So the infinite banking concept, as the late Nelson Nash named it, was simply the name that he gave to this process of becoming your own banker. He was the first person, at least to my knowledge, in history that ever actually wrote it down and brought that information forth to the public in a detailed explanation so they could understand what they were doing with this product. So the process that we know as the infinite banking concept, or as we call cash management with whole life here at Infineo, that process is simply how you put money into these policies. Once it's in there, it becomes capital that's permanent, that's going to grow uninterrupted, tax-free for your entire life. And because you have that in place, the insurance company itself will loan you money from their general account, simply putting a lien on your policy, allowing you to leverage your own asset. So thereby, when you're using that money and paying it back, on the other side of the equation is your money is compounding and growing the entire time uninterrupted. And the way I try to explain that to clients is their home, at least theoretically, should go up in value constantly throughout their lifetime. And that is independent of whether they have a loan against it or not. The cash value in your policy, it works exactly the same way. The insurance companies, they don't care if you use the policy like this or not. As far as they're concerned, you just bought a fancy new F-350. What you do with it when you get it home really is none of their business. The features exist in the product. You can use them or not use them. We choose to use those in the most efficient manner to leverage and finance the things we need, whether it's purchases, lifestyle, future generations. This process, once we have the product in place, it's literally infinite, as Nelson named it. And the more we go through that with clients, the more they see that. And the last thing I'll say about this is when it comes to this product, I'm going to back up to the last section a little bit. I explain this to clients all the time that every other insurance they ever purchased in their life was purchased based on the premise of protecting them from some unfortunate event. And most of the time that doesn't happen, right? Therefore, it's a buying decision. They're choosing to transfer some dollars every year into the cost of insurance to protect from a maybe. And that's not what we're talking here. That's a buying decision. What we're talking about here, when you start one of these policies, it's a balance sheet decision. You're simply opening another account. It happens to be at a different institution than your current savings account, but you're opening another account that you own and control, and you're simply moving money from one account to another. But that new account allows you to do a lot of things that the first one didn't.
So it seems like there's definitely a lot going on in the process. And so I can definitely see how it can get overwhelming for someone trying to go in and do this all by themselves. What would you say to someone looking to make this process a little bit easier for themselves, looking to implement, looking for this product, looking for a process, and looking to take some of the burden off of their own shoulders to figure out how to manage the product? What would you say to someone looking for that? And it doesn't necessarily have to be for you, James. It can be for any of our other panelists.
Yeah, I'll start with this one. Everybody else can jump in. I mean, again, that's the whole reason, the whole mortgage minimizer solution. So if you take the product and process, then we wrap them in a fully baked out solution with proprietary software and calculations wrapped into it to take away that stress or that anxiety from the client, because they don't have to figure it out or know it. All they have to do is literally be able to follow step by step. And as they do that, they'll learn more and more about it. They don't have to be an expert to start. And as far as the actual technical part of doing it, taking a policy loan is less complicated than making a purchase on Amazon on your phone. And putting money back in the policy is no more complicated than going in your online banking and paying your hydro bill. So the actual practical steps are extremely simple. We provide you direction on when to do it and how much to do it based on your own numbers.
That's really, really helpful, James. And for those looking for our mortgage minimizer, how to get access to this, how to see your own numbers and figure out how this works for you, I've just pinned a tweet. If you click the link in there, you'll be directed to a page where you'll be able to book a call with our Infineo experts, the people on this call, and you'll be able to have a free consultation with our mortgage minimizer product where you'll see this process laid out with your financial numbers and see what it can do for you. So I highly suggest that you guys take the time right now, book in your calendar at your availability, and I will make sure and reference that again before we end the space. But yeah, that was really, really great, James. Thank you for that. Do you guys, Liz, Wayne, George, have anything else to say about the process and product specific to the mortgage minimizer and how implementing it may be easier than going and doing it on your own?
Yeah, I just wanted to jump in and say part of the reason that we present this solution is, as James so well outlined, is so that people can see the possibility of one solution. But this is just one use case. So a question that I get from a lot of people is, do I have to have a mortgage, right? So no. Whole life insurance can be used in many, many different ways. That's why the term infinite banking is often used in describing the process, because it really is infinite in terms of the number of ways you can use this. So today we're specifically speaking about our mortgage minimizer solution, but I just want to sort of make the point that this can be used for a variety of circumstances. And James, maybe you can add some flavor to that as well in terms of other sort of use cases that we're developing for people.
Yes, certainly. So number one, many of our clients come to us, about half are probably self-employed or business owners, and putting this solution, not the mortgage minimizer solution, but using dividend paying whole life in a different way within their corporations, their businesses, is extremely powerful. Number two, I'll give you an example. I mean, we're a cross-border agency in Canada and the U.S. So, one thing, number one, the way home equity lines of credit work in Canada is a little bit different than the U.S., but it has no bearing because this product can work on multiple different avenues of calculation. So it works just as well in the U.S. as it does in Canada. And thirdly, we have a new product coming out probably within about a month or so, specifically tackling student loan debt. Now, I know that exists on both sides of the border, but it's certainly much more in the American lexicon. I mean, everybody in the U.S. talks and knows about it. The government's talking about eliminating it. I don't think they ever will. I think that's silly, but it's a big, big problem. And that product is going to show people fresh out of university or 15 or 20 years at a university who are still dragged down by student debt, how they can save for the future and wipe out the debt at exactly the same time with the same dollars. So that's going to be a very exciting product we'll be launching next.
It's after you, George.
Sure. I was just going to add. So One of the great aspects of this whole process, product, and use case that we haven't really touched on yet is, yes, we are eliminating our debt. We are eliminating our mortgage much, much quicker than we will otherwise. But in that process, we are also growing our asset, growing our net worth. So as our assets grow and our liabilities decrease down to zero, our net worth increases by a tremendous amount as well. So this is all happening at the same time. And as James pointed out, we don't have to ask you for extra dollars. You don't have to change your flow of cash. You don't have to go get another job. You don't have to stop buying coffee at Starbucks. We're going to use what you have currently. We're going to maximize those dollars and flow them through these different entities that we've alluded to and give your dollars more than one job. So we're going to give your dollars more than one job. We're going to make them efficient and effective, and we're going to accomplish all these goals at the same time. And you're going to have lifetime protection for your family in a very, very tax-efficient manner. So that is pretty incredible.
It's definitely incredible, George. I couldn't believe it when I heard it, and I actually am still waiting to get this. Not waiting. I'm anxiously trying to get my whole life policy in place and get practicing this. Seriously, the mortgage minimizer. When you guys see the numbers, it'll just blow your mind. It speaks for itself. I'm a numbers guy, and so that was really what spoke to me.
Jackson, I just hop in here one more second. The reason we can sit with clients, all our licensed advisors, they sit in with the clients, they can speak with such certainty is because we're not dealing in speculation. We're not saying your money's going to do this by this time in the future when we have no idea what the stock market might do tomorrow. There is no investment component to this, right? It's simply savings. It's actually quite boring. The ability to do this has existed almost 200 years in North America. And like I said, Nelson was the first person that actually just wrote it down in a book and went out and started teaching people about it. But it was always there in the background, right? It's not some, what's the term? Not some newfangled way to do things. This has always been there. Just nobody knew it.
Yeah, I seriously, frankly, when I'd heard life insurance up until about 7 months ago when I'd started working with Infineo, didn't know that there was any other type of life insurance besides term insurance. I didn't know that it was called term life insurance. I thought that was just life insurance. And so it's really been a whole new world for me coming into the life insurance industry and being able to learn from experts such as you guys who have been practicing this in your own guys' lives and helping clients do it in theirs for years and years now. And so really the one thing I've learned is that there usually is a place that people can implement this in their own lives. It just takes a little bit of work up front, but the reward that it will generate for you and the generations to come substantially outweigh the little bit of work that it takes up front. And I'm a long-term thinker, and it really seems like the group of us at Infineo are, and that's what really resonated with me about everyone here and about infinite banking concepts and cash management with whole life insurance. I don't know if anyone else has anything to say here, or we could begin to wrap it up a bit early if you guys want.
I'd love to hear Wayne providing some comment on this. I mean, I think, one of the objections sometimes people have around this, Wayne, is around, the longer term nature of this process. But when we're talking about mortgages, people are sort of very willing to go into something that has a long-term nature to it. So how do you kind of reconcile that for people?
Well, I think people need to think long-term, and that's probably something that would be extremely advantageous, is we really do need to think long-term. So, how long do you anticipate being on the planet? Life expectancy is age 85. So what if we changed our thinking to do all of our planning to say, hey, this is over the course of my lifetime. And where is wealth actually being built? Whose wealth is actually being built? And how do I think about building my wealth? And so the traditional systems and the traditional education and the traditional offerings are the traditional products. And I'm saying, you know what? Most of these things we just kind of go along with, we just kind of flow with. But when we start to understand, and we should take the time to understand, George is an engineer, and I'm not an engineer, so just to clarify that, but George's brain works in a very unique way. He actually thinks about the mechanics of things. He wants to understand. And while I don't think we need to obsess for people to understand all the mechanics of what's happening inside the mortgage minimizer or even inside a whole life policy, we do have to think for ourselves about what's actually happening and where wealth is being built. And so, this is a great way to transfer the lost opportunity cost or the interest that is flowing away from us to replumb the system so it comes back to us, but we have to think long term. And why does that matter? Well, think about long term. If you're 30 years old getting into a mortgage, you got 55 years of life. And if you actually do the math, you start to realize, well, this is just disciplined, consistent, good behavior that gets rewarded long term. And so let me go back to one of my little hobby horses, and I say this quite often. My optimal client is 21 inches long. Give me an infant, and I can guarantee you that we can produce a very wealthy individual that's going to be able to serve our society in really profound ways, because they're going to avoid many of the traditional pitfalls that create for us lost opportunity and revenue. And so I was with a nonprofit leader yesterday talking about their organization and helping them think a little bit, but he has a 5-month-old son. Before I left, I said, man, I'm coming back to talk to you about your little guy, because we can literally change his future and we can prepare him to live very differently and expect very differently. But we do have to understand that there is something taking place that we haven't been paying attention to. And so, what we're really after here is saying, how do we actually take the wealth that's going somewhere else and get it back into a structure that we own and control? And I think those words are really important, that we own and control. Take responsibility for your finances. Own and control the banking process. Own and control liquidity, as has already been mentioned. Own and control where the dollars are flowing and whose wealth is being built. These are all things that actually we should be thinking about a little bit more regularly than what most people do. We just kind of do what Uncle Joe did and what Grandpa did and what Dad did and Mom, and we get the same outcomes. And I'm going, wow, wealth is flowing in profound ways. It's just not flowing towards us. And, mortgage minimizer is one way to actually say, wow, I'm going to pay this mortgage one way or another. It's going to, about a third of it's going to go to pay off my debt, and about 2/3 of it's going to flow to the lender that helped me get this thing. And James has helped us discover actually that doesn't need to happen. We could probably change those numbers. I don't know, James probably has those numbers in his head, but we can simply change our future by changing our thinking.
And thanks, Wayne. That's awesome. And I want to kind of build off of that by asking you a question, George, around that, because I know you've got a lot to say about intergenerational wealth, and it's something you're certainly applying in your own family, and then teach people about. I mean, I think it occurs to me with reference to sort of mortgages, and what kind of Wayne alluded to is that all these generations of families who've been buying houses and paying down mortgages and working hard, and what's the result of all of that for their family? Like, how could they do it differently so that it was actually like building, as opposed to everybody starting at zero? Because, when you think about it, every generation starting at zero doesn't really even make sense in terms of, long-term legacy for family. So maybe you can comment more on that, George.
Yeah, absolutely. And that's an amazing part of this too, Liz. I'm glad you brought it up, is the intergenerational wealth transfer. So whole life insurance has been in Canada for 175 years in North America. So this is nothing new. So nothing we're talking about is new or exotic or crazy. It's been around for a long time. What's new is how people think and how they use this product. So it's about using it, the process of using it and maximizing it. So the wealthy have been doing this for hundreds of years, and this is how the wealthy transfer their wealth to the next generation because of the tax efficiency. Death benefit is 100% tax-free. So this is what we can do for the next generation. So you talk about multiple generations. So I have 2 children and I have 2 grandchildren. So we have 13 policies in our family, some of which we own, some of which our children own. And the life insured are us, our kids, and our grandkids. So we are setting up a multi-generational family plan that is going to snowball from generation to generation, get larger and larger and larger. And our kids and grandkids are never going to have to worry about money, ever. So this is what we can create, we being the adults, the grandparents, the parents. This is what we can create for every generation that comes after us. So if you want to talk about a legacy, think about that legacy.
I'd like to jump back into Jackson's question, about long-term and, how people sometimes have fear of committing to something long-term. And what we often tell clients is you have the contractual option to fund this all the way to the day you pass away, or 100 and you walk out with the money, but you don't have you don't have the obligation to do so. How you fund this asset and how long you fund it is extremely flexible, starting in the very early years. So people ask all the time, what if something happens 2-3 years in and I can't afford to make my deposit this year and I'm required to? Well, there's a lot of flexibility even within the size of the deposit from year over year, and or the policy itself could pay the next year's deposit. There's so much flexibility in how long and how we fund this product that there's almost no circumstance where somebody would have to walk away from this. And should they do that, worst case scenario is they walked away with all of the original money, right? There's no risk to this other than, as I say, clients, the only risk to this is your behavior, not the product or the process.
Yeah, James, on that note, the flexibility is truly astounding with the mortgage minimizer. And I think that it's truly exemplified in the variety of different cases and examples of people that have been able to put it to use. And so it'd be really great here if towards the end of this space, you could speak to some of the people that have actually implemented the mortgage minimizer and some of the results they've seen. I know you probably don't have a case study open right in front of you, but just high level or as specific as you can go with just showing some of the results of the mortgage minimizer and speaking to some case studies would be great for our listeners.
Yes, I can do that.
Great, thank you. And it sounds like you're getting up a case study on your end here, so I'll give you a second to stall.
Yeah, and while I'm doing that, I would just say that, a question sometimes we get is when people say, I have no mortgage or I have no debt. And, awesome. You get to skip all the boring parts. You can go straight to the fun stuff, right? Then you start funding this product. And what we want to make super clear is this is not an investment and it's not an alternative to investing. This is about banking. This is about where you would get the money to invest should an opportunity present itself. And as Nelson pointed out so eloquently in his book, that if you are sitting on a large pool of capital, investments seek you out. You don't have to go looking for them. That's just human nature. If you have money laying around, somebody's going to come looking for it. And then you get the pick of the litter. You're not throwing your money into an index fund and hoping for the best over the next 30 or 40 years. You literally have the pick of the litter on private investments, on things that you can control that are cash flowing. And there's no way to get a higher return from any investment than by funding it with a policy loan from a banking system that you want to control. It's just mathematically impossible to do better than that. So that anybody else want to add in on that? And then I can talk about a couple of different testimonials.
I might be stating the obvious, but spinning on that a bit, there's zero risk involved in where we're storing our capital. And I won't go obsess about capital. I'd like to, but I won't. But the reality is if you just simply understand, hey, I'm going to put my capital inside a structure I own, and I'm just not going to be undisciplined by interrupting the compounding. If you just did that, your wealth would grow exponentially, even though it's not actually generating a great rate of return, because a rate of return is a distraction from what's actually happening. But if you just simply understood capital storage and leverage, your financial future would look very different than what most people's does.
Yeah. And I've seen the numbers. we're all on this call convinced you guys have been practicing it in your own lives for years now and helping people implement it in their own. And yeah, I think putting some specifics to that might help our listeners here. So, James, whenever you do have a case study or testimonial of some sort, it'd be really great if we could speak to that. And until then, George, Wayne, or Liz, what have you guys heard about the clients that have been impacted and that have been using the mortgage minimizer? I know you guys all have been working with your clients with this solution, and so I'd love to hear some feedback from you guys on what you guys are seeing.
Jackson, I can jump straight in if you want.
Oh, if you have it up, we can go straight to you, James. Sorry, I was trying to give you some more time.
Oh, no, that's fine. Yeah, I mean, so these clients are going back to the very first months when I created this system. The very first clients, I'm not going to give out their names, but they had 12 years left on their mortgage. They had about $20,000 in credit card debt. So we put the plan in place. They wiped out their credit card debts in 13 months. They paid off their 12 years they had left on their mortgage. They paid it out in 4 years in full, clear title on their plan. And they put $100,000 into savings inside their policies at the same time. So it's the interesting part about this is because we're saving the money first and then leveraging it, we get to keep all the growth on the dollars we're using to pay off our debt. No, I know without actually looking at numbers for the clients and people just listening, that's a little hard to wrap your head around. But it's not. The difference is we're not waiting to be out of debt before we start saving. We're saving it first and then borrowing against our asset to wipe out our debt. So it's very powerful. Other clients, of course, they knew nothing about any of this, but they trusted me. They actually knew me. And they're 3 years into the process, and this was as of a year ago. Again, all the credit cards and vehicle loans paid off. $90,000 of their mortgage principal, additional $90,000 has been paid out in the first 3 years, and they'll be free and clear on their home in 6. Yeah, that was a brand new 25-year mortgage, by the way. Another set of clients we had here, same thing. They just started, this is now 3 years ago, and so they made 3 large payments on their mortgage so far, also paid off all their consumer debt at the same time. Their daughter got into, 2 years ago, got into a much more expensive school than they were expecting. So they redirected some of the money to look after her tuition. And by doing that, it only added about 6 months until they're going to be completely debt-free. So there's so much flexibility built into these plans. And life likes the 4-letter words I like to point out. So we provide a plan from A to B, the most efficient and quickest way. That doesn't mean it's locked in stone. It's become your own banker and life happens. But here's a question. If you had a 25-year mortgage and we laid out a plan so you could be clear title on that home in 6 or 8 years, all your debt's gone, life came up and you added an extra year before it was all gone, well, is 8 or 9 years still not better than 25? That's still 15 or 16 years of mortgage payments that are now flowing in your direction rather in the direction of a third party that does not serve you long-term. So, I mean, it's testimony after testimony. They're all very, very similar. And none of these people knew anything about how this worked when they got started, other than they liked the plan, they liked the numbers, and the instructions were laid out very clearly that they had confidence, enough confidence, not great confidence, but enough confidence in which to start. And there was no pain point if it didn't work out.
So I think this is, really powerful. I mean, people in the US who are needing to move or their life circumstances have changed and they're looking to get into a new house. Folks in Canada who are coming up for mortgage renewals. There's a massive amount of those renewals coming due this year and next year into much higher rates than what they locked into. So being able to, talk about the results that you do like that, James, in terms of people having to ride this up and down interest rate game, let's call it, for, another 25 years versus having it all knocked out in sort of 5 to 8 years, that really is a game changer in terms of what they can do and the amount of even just stress that they're dealing with in terms of what's changing with their mortgage payments and the flexibility it gives them in their lives. Is that something that's come up that for the results that you've seen so far?
Yeah, it's funny because I just thought of one more here, so I pulled it up while you were talking, Liz. So no, these are just people they're coming up on about 2.5 years since they started. And so they were second marriage, combined family with 5 kids. They had no other debts, but they recently purchased a new home on a 30-year variable mortgage. And just after they did that, the mortgage rates started climbing. And as you know, anybody in a fixed variable rate mortgage right now, their payment doesn't change, but they're not even covering off the interest on every payment. As the rates have been climbing and climbing, their amortization schedule is going in the wrong direction. So every year they owe for longer on the mortgage rather than less, right? So we're seeing a lot of that right now with their clients. So they were a little panicky once this happened. So I ran all the numbers for them, and their 30-year mortgage, even as variable rates and all the extra debt that they're growing on their mortgage because of the rates, they're still going to be completely done at 8 years. And of course, they're newly married, blended family, 2 kids in university, lots of variability in their life. You know, they have a Great Dane that broke its leg, and that cost them a lot of money. Didn't see it coming, but they redirected a little money from the policy loan to pay for the dog. Little things like that are I mean, it's very flexible that way. So, yeah, I mean, being able to see the long term and how it's going to look, regardless of how scary it is today for them, once they can see the whole plan, you know, it's 30 years down to 8, right? 22 years of pretty big mortgage payments that they're not going to have to make. And he's going to be 60 by the time this is done. She's going to be 53. He's going to be looking to start slowing down. And the fact that he's going to go into retirement and have no debt, nothing hanging over his head, that's a big sigh of relief. And because of that, they can take a deep breath today, even though it's pretty scary right now. They just have to stick to the plan.
Completely agree.
I was just to add what James said there. And if we really think about this for a second, like just stop and think. So 22 years of mortgage payments, how much money is that? So people don't even think generally about the volume, the amount of interest that we're sending to the bank over the course of a mortgage. Often we will be doubling our original mortgage in what we're going to send to the bank. The amount of interest is incredible that we're going to give to the bank. And if we can stop that 22 years early, think of the impact that will have on your life. And you're going to have cash available at the end of the day, capital that you can now deploy any way you want. And you're going to have protection for your family. So the power of this is just incredible.
George, let me say this. That was an $800,000 home that they purchased. $800,000 was their mortgage. And on that, I mean, assuming the interest rates, we don't know that, but if they stay the same as they are today, as of today, their mortgage payment's $4,000 a month. If that were to stay even throughout, which it won't, but assume that it did, that's $1,056,000, 22 years of mortgage payments that are not leaving their house.
It's truly just phenomenal. And I mean, like I said earlier, I'm a numbers guy. And so I was convinced pretty immediately. And it didn't take any convincing when I saw the numbers and once I talked through it with you guys. But what would you guys say to someone that still isn't convinced and doesn't think that this can work for them? They aren't insurable. They don't have free and clear cash flow right now. What would you say to them? I know it's a very individual situation and it's very hard to speak to broadly.
Yeah, I'll say this. I hope this isn't harsh, but belief is for things you can't prove. Right? If you're uncertain, you don't think this could work for you, you might be right. But I tell you what, until you sit down and plug in your data and have an honest conversation with one of our advisors and walk through your expenses really carefully to make sure if there's a surplus budget, it's really accurate, because we do this to make your life easier, not harder. That's super important. We're very conservative from that perspective. But sit down and plug in your data and analyze it and tweak it so you're totally convinced your numbers are correct. And then generate a report and see what it says. And only then do you actually have something to discuss or really talk about or go and deal with on your own time in your own heart, because people understand what their numbers are, and we see this every day, or they think they do, until they put them down on paper in front of them. And what I found out, I mean, us humans are pretty funny creatures. If You tell me with your own data, for example, that you spend $7,000 a month and you make $9,000. And if you look back over the last 3 years, you made $7,000 a month. Or sorry, you spent $7,000 a month. And I said, okay, your surplus is $2,000 a month. That's what we decided, 9 minus 7. And you put a plan in place, and suddenly they feel restricted and punished because they have to live within that 7,000, even though you didn't set that number for them, and they didn't even set that number for themselves. They just identified it by looking back. And simply by identifying how much they spend, they feel restricted to live within that budget. It's not our budget, it's their budget. Nothing has changed in their life whatsoever, but simply by identifying it, it feels restrictive. And it's a really strange emotion for people to have to deal with, but we see that all the time.
And so what do you do when you see people dealing with that sort of restrictive feeling where they feel that even though there is no change in their budget, but they still feel restricted? What do you say to these people to get them over the hump?
Yeah, and I might have to pass that over because I'm a very logical person. I struggle with the feelings part. I'll fully admit that.
It's all good.
The numbers are what they are, and some people are super excited about it, and some people don't like looking at their own reality. And like I said, if everybody got it the first time and understood just based on the financial, there's no financially logical reason not to do this. That doesn't mean some people still choose not to. It's not very many who take the time to dive in it. But occasionally somebody says, you know what, I just can't commit to anything. And that's got nothing to do with us or the numbers and everything to do with their personal life, right? And I don't think there's anything we can do about that other than give them some time and space, and maybe they come around.
That makes sense.
One thing I say to people, Jackson, is there is no one that we can't help. However, maybe just not right now. So when the time is right, we can definitely help you. And there are many different ways to skin the cat, right? We talk about flexibility. We build in flexibility. There are many different options. Even if someone is uninsurable, there are still other options. We can have someone else as the insured. Whoever is the owner of the contract, and this is a binding contract between you and the insurance company. Whoever is the owner has the control. With ownership comes control.
And Wayne, I didn't know if you had anything to say on that as well.
Yeah, I think one of the questions I love to ask for people that are struggling and wrestling to sort of understand is I ask them this question: do you like taxes? And most people don't really like taxes. And if you could, I don't think we should cheat on taxes, but I think we should minimize them to the very best of our ability. But probably the highest tax people pay is an ignorance tax. And I'd say, you know what, that you can eliminate, but it does take some effort on your part. But that ignorance tax is extremely high, higher than any other tax we pay.
That made me laugh, Wayne. I appreciate that. And we're actually coming up on time here. And so to be respectful of everyone's time, I think it'll be good to wrap things up. I really appreciate all your guys' insights. Before we leave here, it'll be great if you guys could tell the listeners where they can find you guys, how to reach you, and what they should do if they want to get in contact.
Yeah, infineogroup.com, INFINEO group, one word.com is our website. You can find any of us on the website. Just reach out to us, book an appointment. One of us or one of our agents will be happy to discuss your personal situation. So the idea here is that everything is based on you and your numbers and your situation. There's no one size fits all. This is not a cookie cutter scenario. We have a tool that helps us, but it's all based on your specific individual needs, goals, cash flow, etc. So that's very important.
Okay, thanks everybody. I'm not sure what happened to Jackson. If he's able to.
Oh,
close it out.
I had just been speaking into my muted microphone. Thank you, Liz.
That's okay.
Yes. So to make it easier for everyone here, I have put a pinned tweet with the link there. It'll direct you to an agent in your region that will then be able to take you through the mortgage minimizer and show you what it looks like based on your personalized numbers there. And so, again, click the link, schedule at your availability, and see what it looks like for you. We highly encourage you to do this. And if you're still, for whatever reason, doubting this, there's no reason to be until you see the numbers. It's all personalized to you. And yeah, we really, really hope you take us up on this offer. We're hosting a webinar on February 22nd. We'll be posting about it on our Twitter. And so if you want to sign up for that, be sure to do that. Thank you, George, Wayne, Liz, and James for showing out today and giving us all of your incredible insights. And thank you to our listeners. And we will be back with our next Twitter space next Tuesday, talking about the tokenization of real-world assets with Provenance Blockchain. And we hope to see you there. Thank you again, guys.
Thanks all. Have a good one.